Ever wondered what super investors are doing with their portfolios? Well, the art of portfolio rebalancing is a key strategy in the investment world. It's a fine dance of adjusting portfolio holdings to maintain an optimal balance of risk and reward. It's about selling high-performing assets and buying those with growth potential. It's about diversification and investing in sectors that promise a brighter future. Take, for instance, BlackRock, the world's largest asset manager. They've been making strategic moves, increasing their stakes in a number of big-name companies. Their targets? Uber, Broadcom, Amazon, Apple, and Microsoft. Yes, these are the staples of the tech and transportation sectors. But it's not just about the sector, it's about the potential these companies hold. Now, let's shift our gaze to Berkshire Hathaway, the investment vehicle of the legendary Warren Buffett. They've been busy too, adjusting their portfolio in a way that emphasizes diversification. They've acquired Chevron, putting an emphasis on energy. They've also scaled down on some holdings, signaling a strategic portfolio realignment. Then there's Ark Invest, a firm known for their focus on disruptive innovation. They've increased their investments in companies driving forward the future, like Tesla and Meta platforms. At the same time, they've moved away from others like Coinbase and Nvidia, signaling a possible shift in their sector focus. But it's not just about these big firms. There's a spotlight on Charter Communications too. Despite the challenges in the broadband sector, there's noteworthy insider and investor activity happening. So, what's the common thread here? It's the quest for maximizing returns. It's about making strategic decisions based on market trends, growth potential, and a belief in the future of certain sectors. These super investors are not just moving money around, they're making calculated moves, informed by deep analysis and an understanding of the market dynamics. Diverse strategies, different sectors, but all with a common goal, maximizing returns. Now let's delve deeper into their specific moves. BlackRock, a behemoth in the investment world, has made some intriguing moves. They're boosting their stake in Uber by 35%, now valued at a cool $9 billion. Despite concerns over Uber's profitability and strategic direction, BlackRock sees an opportunity. Similarly, they've upped their Broadcom stake by 10%. With a valuation at $38 billion, it's clear that BlackRock is banking on the company's strong dividends and industry position. Amazon's growth isn't to be overlooked, with BlackRock's holdings rising by 2%, pushing the total value to $95 billion. And let's not forget about Apple and Microsoft. BlackRock demonstrates faith in Apple's ecosystem with a 1% increase, pushing its total investment over the $200 billion mark. For Microsoft, a slight boost in stake underscores the potential they see in AI technology. BlackRock's bets seem to lean towards tech giants and disruptive companies. But what about Berkshire Hathaway? Berkshire Hathaway, led by the legendary Warren Buffett, has seen some interesting shifts. A strategic portfolio realignment is underway, signifying a new direction for this investment giant. The firm recently acquired a substantial stake in Chevron, signaling a push towards energy diversification. SiriusXM also joined their portfolio, adding a new dimension to their investment strategy. However, it wasn't all additions. In a surprising move, Berkshire Hathaway reduced its Apple holdings by 3.7%. It also exited StoneCo, while scaling down on Paramount Global and HPQ Inc. These divestitures suggest a strategic shift, and perhaps a recalibration of their faith in these companies. Every move Berkshire Hathaway makes is watched keenly by the investment world, as they often serve as a bellwether for broader market trends. This recent realignment might just be a signal for other investors to reassess their own portfolios. While Berkshire Hathaway is diversifying, Ark Invest is focusing on growth. Let's find out how. Ark Invest, known for its focus on disruptive innovation, has been making some bold moves. The firm has been increasing its stakes in companies like Tesla and Meta platforms, displaying a clear inclination towards organizations that are pushing the envelope in their respective fields. Tesla's electrification efforts and Meta's foray into the metaverse have clearly caught Ark's eye, reinforcing their reputation for growth-focused investments. But it's not just about adding to their portfolio. Ark Invest is also making strategic exits. They are moving away from companies like Coinbase, Nvidia, Twilio, and Zoom. This indicates a shift in their investment strategy, looking beyond the current tech giants to sectors with higher growth potential. Whether it's genomics or digital platforms, Ark Invest is constantly looking for the next big thing. Their approach emphasizes the importance of flexibility and adaptability in the investment landscape. From growth investments to strategic realignment, these super investors have shown us that there's no one-size-fits-all strategy in investing.